And welcome to our look at the upcoming Friday, October 3rd, non-farm payroll Friday trading session. In front of you, I have the economic calendar as per usual, and we do have a couple of announcements coming out during the day that could be of some importance. We have the UK releasing services PMI for the month of September, anticipated to come out at 59.1. This will be very localized to both the British pound and the FTSE, but really it's very likely that we probably won't see a massive move though, because it is non-farm payroll Friday, and this is truly the biggest announcement that comes out, and this will affect everything, quite frankly. Look for the U.S. stock markets to move drastically based upon that. Look for the U.S. dollar to move fairly strongly based upon that. With that being said, you know, we look at the rest of the day and there isn't a whole lot. There's ISM non-manufacturing PMI. My suspicion is, though, by the time that comes out, we will have already made our move, and really at that point in time, it will more than likely just give us maybe more confirmation if we have a negative or a positive move in the stock markets. In general, though, I feel that this is a very U.S.-centric day, and that is definitely going to be the case with the announcement coming out for employment numbers out of the United States. Ultimately, though, we'll have to see exactly how these things come out. Generally what happens is we get a very choppy day, and then hopefully at one point or another make an actual move in one direction. That being said, though, let's take a look at the charts and see what we have coming up. The first thing that I would point out is that the S&P 500 has in fact fallen significantly. Because of this, it appears that we do have some more bearish pressure ahead. We certainly have a lot of noise below, so it's only a matter of time, in our opinion, before the buyers step back in. But with non-farm payroll coming out, you have to question, you know, are we going to see something like this with this uptrend line? Or is 1900 going to come into favor? It's really hard to tell at this point in time, but it's difficult to imagine that the S&P 500 is going to continue going lower for too much longer. We have had a significant sell-off, and we are most certainly still in an uptrend. So having said that, we are a bit cautious about selling at this point in time, or buying puts. We actually want to buy calls on supportive candles if we get them. We just don't see anything in the charts right now. After the non-event that was the interest rate announcement and the press conference out of the ECB during the session on Thursday, you can see we tried to rally to 127 and yet again failed. So it looks as if we're going to continue to buy puts on rallies in the euro dollar. I don't see that changing anytime soon. I also see 128 as massive resistance, and most certainly 130. The DAX continues its move lower. 9,200 in play now as support. A big cluster here. Could go as low as 9,000. At this point in time, would be very leery of buying calls. We certainly don't see anything that gives a lot of confidence at this point. So really, you could buy puts on short-term rallies, but if we get like a daily supportive hammer down here, that might be the catalyst to turn things back around. At this point in time, the FTSE is coming completely undone, and anytime it rallies, it's a put buying opportunity. No interest in buying calls at all right now. We would need to see a longer-term supportive candle, at least something like a hammer on the daily chart. Quite frankly, a weekly hammer would probably be needed at this point, because the fact that we sliced through the 6,500 level during the session on Thursday, that's a pretty significant move. So now it looks like 6,400 will be targeted, and probably lower than that given enough time. And finally, over in the dollar Canadian dollar, you can see that we fell significantly during the session on Thursday, but bounced off of the 111 area to form a nice looking hammer. This is a market that looks like it's ready to go higher. 112 is resistance, but above there it's a call buying opportunity, just as pullbacks would be, because this looks well supported. The reason I bring this up is dollar CAD tends to move pretty significantly during non-farm payroll days, so this could be a pair to watch. And with that, we've taken a look at the upcoming Friday, October 3rd trading session.